Okay, 3 cheap option plays this week that I'm currently trading that's showing up on the unusual options activity. My first one is MU, which is Micron Technologies. There's a lot of calls being bought right now on this one. As you can see here, look at the volume right here. But that expires this week. And look at next week. There's a lot of volume there. People buying the $80 strike price calls. And if you go down, there's calls being bought here for the December 17th expiration date. And you can pick this up for less than $200. That's 167 per contract. The other ones that I showed you, which are let's see, right here, less than $100 a contract. And let's look at the chart to see if anything is happening with this. So, okay. It's starting to break out at new highs because it was down. It's been down for a while from its highs of 82. And it was a sell off back here in August. Now it's about to break out. So it's look like it's trending with Wall Street. So it's I would pick these calls up and let's look and see some fundamentals about the company. Let's look at the profile. I want to see what this company does. Oh, semiconductor company. So, and let's see what bar chart opinion on it. Well, they got it listed at a sale right now, but that don't mean anything. The direction could trend up and they can change this. But yeah, but Wall Street, it looks like it's bullish on this stock. Let's look at the put call ratios also to see if, yep, look at that. Way more calls being bought than puts. So it looks like Wall Street is pretty bullish on this right here. So on this one, let's look at the option prices to see what direction you want to go. Do you want to do a debit spread or do you want to buy calls or where you want to go? Volatility is not as high. So yeah, on this one, you can either do a debit spread or you can buy calls. So that's what I would do. I would do either a debit spread or I would buy calls. Let's look at the next week. Yeah. 26. That's where most of the volume is. Look at this right here. So yeah, right there. Yeah, I would do either calls or debit spreads on this one. So my next one, and you've already heard of this company, is Ford. Right now, Ford is had a good run. It's looked like it's breaking out of the $19 range. It was just at first it was just trading around 12 and 13, but now looking forward, it's just moving on up. So I've bought some straight calls because they're cheap. Let's look at the option prices. And matter of fact, let's look at unusual options activity on this. And right here, as you can see, more calls. Look at this for next week, a $20 call. Look at that. Look at that volume. And more people trying to get in. So man, look at all the volume on these calls. There are one put right there for this week, but look at this. Yeah, that must be some good news before it. Let's see the news in the headlines. This outperforming Tesla. Let's see any news. Analysts. Let's look at earnings estimates. Surprise. So I guess they had a good earnings estimate last in a few days ago. And look, after that, the stock has shot up. So yeah, Ford look like it's going to be a pretty good stock. I'm not sure, it's always I've always liked Tesla and other stocks better. But yeah, I would start buying calls in Ford now, so because option prices, look at the option prices. Yeah, volatility, ooh, implied volatility is high. So yeah, this is something that I would do a put debit spread on. You can buy calls if you want to, or you can sell puts because the implied volatility is high. So it may be better to sell puts or sell puts at the $20, which allows you to tie up about $2,000 because you gotta just in case you don't close on a put, you have to have that amount of your account at least 100, 100 shares per 100 per contract. So that's, yeah, about $2,000. And puts, let's look at the puts. Let's look at puts down here. If I sold a put for next week, let me see how much I will collect. Here's the puts. I would probably be, yeah, that's not a bad amount. You can collect about $100 if you sell at the $20 strike price. So yeah, or around here, about $100 you'll collect per contract if you sell puts. But I would do a put credit spread on this because I see the volatility is very high. So let's go and look at the put credit spread screener. I want to see if there's any opportunities on a bull put. Yeah, a lot of opportunities here this week. Let's look at next week. So look at this potential profit. You know, these are guarantees, but it lets you know that there's a lot of potential profit if you do a a bull put spread or credit spread, put credit spread is what we call it. So there is a lot of opportunity right there, and I've already got some calls that are doing well. I bought calls when it was at 18, so and it's already doing well. But yeah, this is another cheap option play, Ford Motor Company. And my last one is going to be Roblox, RBLX. They really blew it out the chart with their latest earnings. And I think this stock is going to continue to go up. Look at that. It just shot up right there, right after earnings. And let's look at the financial. I want to look at the financial summary or earnings estimates. Surprise, yeah, 18% surprise, and they just knocked it out the box. So let's look at the income financial summary. And as you can see, revenue is declining. It's still, still a fairly new company. They had but yeah, net income is down. That's usually typical for new companies just trying to get their stuffs in order, and assets more than liabilities. Yeah, maybe even a good stock to own. Cash flows starting to look a little bit strong. So yeah, maybe a good stock to own. And it's more of an entertainment company. I think my kids play games on here also. So it's a good, yeah, it looks like it's a good stock with, growing revenue. Sales growth is good. So yeah, those are my three option plays this week. Three cheap option plays. Oh, I didn't even give you the option prices. Hold on, let's look at the option prices. The option prices here, let's look at the unusual options activity. Okay, yeah. Look at all this volume here. So there's a call for this week that's being bought. Let's look at the volume and the dates. So that's all this week. Next week is still a lot of calls at 110, but that's pretty pricey right there. Yeah, these calls are pretty. Yeah, let's look at implied volatility. I know it's a new stock, so implied volatility is going to be sky high. Yeah, put debit spread. That's what you need to do on this one. Yeah, because we want to be a seller of the options when the volatility is high. Let's look at puts. Let's look at the right here. Yeah, I think I did put credit spreads today. I do so many trades. Sometimes I forget. Let's see. Yeah, a lot of potential profit here. Let's look at next week to see what's there for next week. Yeah, a lot of potential profit. And I would stick around a 110, 115 price on a put credit spread. Or yeah, around that price, 110, 115. But that are my cheap option plays. If you have any questions, please comment and I'll answer them. Thank you.